All right. Well, Joseph, welcome back to the podcast.
Thank you very much, Alec.
Thank you again for being here and providing us all the insight in the lending world.
Oh, yeah.
So I wanted to get this podcast started off by talking about the different kind of loan types out there. When you're getting a mortgage for a home, there's tons of different options you have for loans. It all depends on a lot of different factors. So let's start off with kind of what some of the more standard loans are. I guess for today we'll get into just the two main ones, which are conventional and FHA, and then there's also VA. Real quick, VA, I think we can, that's a quick one. That's something that for veterans, veteran specific. There's things about that loan we can go into, but that one specifically for veterans, and it's super beneficial. If you're a veteran, that's a great loan program almost every time, if you qualify. But yeah, tell us a little bit about some of those, mostly like let's say conventional first.
Sure, yeah. And please stop me if I start going down the rabbit hole. I tend to get a little bit, this is complex subject material, and I tend to get a little bit too into it.
You're excited about your job. I love that.
So, the main thing is you got your conventional loans and your FHA loans. I'm not going to say which one is better than the other.
Yeah, because for every person,
for every person it's different.
Depends on the timing of it and all that.
Yeah, and the big thing is FHA loan it's a federally backed loan. You call it a government loan, just like a VA loan. Let's
talk about that. So federally backed, that would mean that the federal government's backing it up. So that if you were to default on the loan, the lender, the person who's letting you borrow the money, then has the government to back them up. Yeah, right? Yeah.
So the idea is an FHA loan where you might have to put down a relatively small amount of money. Is considered to be a little bit more risky than, say, if I'm trying to buy a $100,000 house and I put down $50,000, I'm probably not going to walk away from that mortgage and walk away from that house that I have $50,000 invested in. Whereas if you have a smaller investment, that can be considered a little bit risky. So the U.S. government, does some things well and does some things not as well, but they really, really like home ownership, and that's something that I am a huge fan of. So the U.S. government really encourages and does policy to really encourage homeownership. And so this is a big one where a bank wouldn't necessarily lend out create a certain mortgage product because it might be considered to be a little bit more risky than maybe something else that they could be doing. But the government basically says, hey, if you do this, if you help out our population, our taxpayers, then we'll get your back.
Yeah. I was reading something about the FHA recently, and it was tell me again. You remember the year it was incepted?
Oh gosh, I don't remember.
80s, I think, or something like that.
I can't remember off the top of my head.
But when it was first put in, it was the idea that home ownership is crucial to building wealth and to the American dream, I guess you could call it.
Well, and it really started with the VA. You had all these veterans coming back after World War II, and the U.S. government's like, look, these guys just went and risked their lives. A lot of them got injured. A lot of them, they paid a pretty dear price, and so it was like, what can we do to help our veterans? And so the U.S. government made it relatively easy for somebody coming back who maybe just spent 4 years abroad to come back and buy a house.
Yeah, and so the FHA program was essentially an extension of that.
I don't know if I can say it's an extension of it, but policy-wise and philosophically, it's an extension of it.
Okay. Yeah, that makes sense. So fast forward to today, you have these different options. From what I understand, and again, it's very different for every person, but a lot of times, if you're a first-time buyer, if it's your very first loan, an FHA is a very attractive loan. And part of that is because you don't have to put as much money down. If it's your first home, you may not have that capital. One of the things that I find so awesome about real estate, if once you get into ownership, is that you can build equity by making your payments, and if you buy in the right market in the right place, you'll build equity in the home as it increases in price, and it brings you a lot of power when you have tens of thousands of dollars that start to build up in a home, and you want to go to the next place, taking that money and literally putting it into the next one as the equity. It's pretty incredible. I look at, in my personal situation, I live in a condo, and it's a 2-bedroom condo, and I bought it a couple years ago, and my payment is higher than that of my parents. And my parents live in a 5-bedroom house with a big backyard, backs to a pool, and it's pretty incredible, but it's because they have so much equity in their home, and they've built that over time to where now that it's just not even a huge factor of their expenses, their own payment.
Yeah, I mean, you can have a $100,000 house and a $100,000 loan, or you can have $1 million house with a $50,000 loan, and so your mortgage is going to be, and that's exactly what you're talking about, equity. And most people, I mean, I don't know if I'm going to say most people, but a lot of people, the equity that they put in their house comes from houses that they owned previously.
Yeah.
I mean, unless somebody just gives you a couple $100,000.
Yeah. And this all goes back to the idea of the FHA, and that building wealth by starting with home ownership is one of the best ways to build wealth for someone who doesn't start with it.
Yeah. I mean, that's worked out really well. I'm a great situation. I got my first house, got an FHA mortgage, and, barely scraped together. I don't even remember. I scraped together what I had. I got some help from family. I mean, that's a big one. Is there's a lot of loan programs where you can get help from family, and we lived in that house for 3 years, and it grew in value, and we paid the mortgage down over time, and it's really kind of been the launch pad for my family's financial situation.
Nice. That's great. It's pretty amazing. So, we're talking about this, and it's it's like FHA. It's lower down payment. Oftentimes you actually end up, lower down payment, and oftentimes you end up with a lower monthly payment with an FHA versus a conventional.
Yeah, you certainly can. Yeah.
So if that's the case, then what's the point of even going conventional? Why wouldn't you just do FHA every time?
Yeah, that's a really good question. I mean, the biggest thing, the way I kind of explained it to people is, without getting too complex, it really has to do, a large part of that has to do with mortgage insurance, which I don't know how much, how deep you want to go into mortgage insurance, but
that's kind of what I was alluding to.
Yeah. Okay. Yeah. So an FHA mortgage, your mortgage, the factor that determines your mortgage insurance payment is going to be the same, no matter what your credit score is, and no matter how much money you put down. So that's a good thing and a bad thing. I mean, it's a really great thing if you were going to go with a conventional loan and maybe your credit's not A++, and maybe you have a really small down payment. Maybe your mortgage insurance payment would be quite a bit higher. I mean, on a, again, without quoting specific numbers, with a conventional loan, you could have a mortgage insurance payment that's multiple hundreds of dollars, $300, $400, $500 if you went with a conventional loan, whereas with an FHA mortgage, it'd be considerably lower. Now, so you're not really, I use the word punishment, even though it's kind of a bad word, but you're not really punished for less than perfect credit. The other side of that, though, is you're not really rewarded for perfect credit. So if you got perfect credit and you've got a good amount of money to put down, but maybe not getting to that 20% mark where you get rid of mortgage insurance, a conventional loan is probably gonna make a little bit more sense for you. But if you're like most first-time home buyers, you don't have a lot of money, maybe, if you're younger, you haven't had a long time to build up this, the credit of an 80-year-old that's had a credit card since 1974, then an FHA mortgage might make sense for you. I mean, it's pretty hard to say generally, but it, depending on the person, for a first-time home buyer, an FHA mortgage could make a lot of sense.
For sure. Yeah, and there's a lot of really cool details to it. And whenever I have someone who asks me about, what's a better mortgage or what's the better deal right now, I always say talk to a lender. Because you really just don't know per situation, and it can just look really different for different people.
Yeah.
And I want to kind of segue that into just generally about loans. When someone's buying a home and getting a loan, one of the things I hear often is that if I'm buying a home, I'm getting a mortgage. It's typically a 30-year loan. Sometimes it's a 15-year or different things. But on a 30-year loan, someone will say, wow, I'm 10 years away from paying off my house, or man, I can't believe it. It's going to take 30 years to pay off my house, and that is something I think is generally a poor financial decision. That most of the time, and generally most people will buy a home and then sell it years down the road. And I think one of the things that will be an obstacle for buyers to get into a home is you say, wow, look at all this interest I'll pay on a home. Look at how long it'll take to pay this off. When in the end, most people will actually end up just living there, making the payments that they had, and then selling it down the road. Now, if you, of course, you want to sell it at the right time so that you make your money back and hopefully some more. But that idea of rolling it on is pretty incredible. And if your payment starts, one of the things of the mortgage I think everyone should realize is that when you get your mortgage, your payment doesn't change generally, if depending on the type you get. If it's a conventional, whereas rent keeps going up over the years, and so just that alone is enough to start to build your wealth without having to pay off your house and put all your money into something that's just sitting there.
Yeah, I mean, the question, it's always relative. I mean, if you have a way to live rent free until you retire and you just don't have a housing payment, then compare that with the cost of home ownership. It's probably a pretty easy decision to make, but you need to compare what your mortgage payment might be to the rentals, to your rental market, and even if it costs a little bit more to buy a house than rent, it in most circumstances it still makes sense to buy, and so this is something I deal with on an individual basis where I've got some tools where I can say, like, look, here's the long-term outlook if you rented for 30 years versus if you owned a house for 30 years at a projected interest rate, and it's, I mean, really, almost every time, I can't say every time because I'm sure there's an exception, it almost always makes sense to own a house for 30 years over rent. And if you consider rent, that's 100% interest. I mean, you have no principal with that rent payment. And yeah, it's true. I mean, if let's say you bought your first house and lived there for 30 years. Now, nobody really does that, but let's say you did. Your principal and interest payment, if you have a 30-year fixed mortgage, is going to stay the same for those 30 years. And that rent is going to continue going up. And if I could rent 30 years from 88, 89, if I could get rental market rates in 1989 and pay that kind of rent, like, I'd probably be in pretty good shape.
For sure.
Whereas if I bought a house 30 years ago and had that, or had that mortgage payment, it just makes more. It generally makes more sense to own a house. I mean, unless everybody's situation's different, but for a lot of people, it really does. Homeownership really does make financial sense, even on top of all the emotional and less tangible benefits.
Exactly. Yeah, the sooner you can get in, the better. For the most part. Well, I think we're almost out of time today, but thanks for being on again.
Yeah, absolutely.
And,
thanks for having me.
Yeah, we'll see you next time.
Cool.